Good morning, good morning, good morning. I am Kenny Polcari, your host of the party, and today is Monday, August 15th, 2022. And look out the window. You can't really see. It's very humid here in Florida today. You can see all the kind of condensation accumulating on the windows, but it is set to clear up. So what's happening today and what's going on? Well, oil is under some pressure, down about $4.50, trading at 88 and change, as news that Saudi Aramco is ready to ramp up production suddenly if the government asks them to do it. And China comes out with weak economic data suggesting that demand is going to fall off. Of course it is. Never mind that it's the middle of August and it's a big vacation time and so many people are away. And so, as I told you a month ago, moves in the market, and that's any market, commodities market, the equities market, the bond market, can be exacerbated and exaggerated because of less participation, right, over the next 2 weeks. So get ready for it, because you're going to see these spikes up and spikes down as the news hits a tape. So what is it that you need to know, right? What are we worried about? So investors need to embrace the no recession story, as they took stocks higher last week, although today is a little bit of that calling into question. Treasuries remain inverted, pointing to a recession. They're inverted now for 8 weeks. 8 weeks they're inverted. Gold, it waffles between maybe there is, maybe there isn't. We're going to check that out. And as I said, oil is under pressure this morning as Saudi Aramco hints at upping production. And it's a big week for the retailers. Are we going to find Christmas in September? And what do we have for dinner tonight? Well, we're having the Parmigiana crusted Mahi Mahi. You can use this recipe on really any white fish, but we'll get to that in a moment. So on Friday, stocks rose, posting another week of gains, marking the longest stretch since November of 2021. The Dow advancing by 424 points or 1.3%. The S&P up 73, 1.7%. The Nasdaq racing ahead by 270 points or 2.1%. The Russell up 42 points or 2%, and the transports gaining 75 points or just 0.5%. The mood helped clearly by Wednesday by the results of the CPI on Wednesday, and the recognition that inflation just might be subsiding a tiny bit, as Joey made it very clear, saying that the CPI for July came in at 0% month over month. Let me repeat, 0%. That sounds great, but when you take out food and energy, which they do, the CPI for July rose by 0.3% year over year. It's still up 8.5% near 40-year highs. But this report did give investors a reason to think that the Fed will take a step back and raise rates by only 25 or 50 basis points next month, which they say will prevent us from going into a recession, unless we're already in one. But that's still up for debate. And here's another news flash. Congress just passed not one, but 2 massive spending bills. One is a climate and chips bill, which they sold as a chips bill, and the other is a massive tax and spend stagflation bill, right? Pushed forward by Schumer and Manchin. And both spending bills are expected to only add to the inflation story rather than reduce inflation, as Chucky Schumer tells us, but the jury's still out. In addition, we all know that they're hiring 87,000 new IRS agents to go after anyone with a Venmo account, saying it's only the billionaires. Because you know all those billionaires that are moving money via Venmo and not telling anybody, thereby avoiding millions of dollars in taxes. I mean, it's laughable. So, my friends, I would say not so fast. While inflation did recede in July, 1 month does not negate the last 17 months of advances, right? March of 2021 is when it started. So it's a bit early to rip off the bandage and celebrate. I think it is, right? I think it's too early. So remember, we are seeing history repeat itself, right? This is reminiscent of 1980-82. So don't be surprised to see inflation and employment suddenly reverse course and move up in the months ahead. And all that means is the Fed should not change the pace or increment of increases that they have led the markets to believe is happening, meaning 75 basis points should be the call. Anything less risks the chance that they will be seen as waffling, bowing to the pressure, a mistake for sure. For those of you who weren't around in 1981, soaring inflation also retreated and unemployment mounted, right? It rose to 7.4%. And the Fed pivoted, only to see inflation and unemployment rear their ugly heads again and zoom higher, forcing the Fed to repivot and force rates to 21% to tame the beast. And that forced the country into a deeper recession that lasted from July of 81 through November of 1982. One that may not have happened had the Fed stuck to the original plan and kept increasing rates. So I say stick to the plan. Raise rates by 75 basis points in September, Mr. Fed. Okay, at the moment, the Treasury curve remains deeply inverted, but don't tell anybody. The inversion points to the idea that the Fed tightening is coming, is going to send us into a deep recession, and it most likely will. But remember, they haven't said a word about reducing the balance sheet at all by September. Remember, we're supposed to be reducing it by $90 billion a month starting in September. How's that working? I don't even think they've been doing the $40 billion a month for the last 4 months that they've been told of. Shh, don't tell anybody. Oil traded down 2% on Friday on the expectation that any disruption from the damaged pipeline in the Gulf of Mexico would be short-term at best, right? So any fear that supplies would be disrupted for any length of time are no longer an issue. 7 offshore deepwater platforms had been affected on Thursday, and that helped to send oil higher on Thursday. But that's no longer an issue. And so the run-up on Thursday was met with selling on Friday. This morning, oil is trading down another $4 to about $88 a barrel. That's great. Saudi Aramco telling us that they're ready to raise crude output to a maximum of 12 million barrels a day if the Saudi government requests it to meet that demand. Right? Also, easing of COVID restrictions in China and a pickup in demand in the airline industry is behind that request. But it's funny. Overnight, the Chinese just reported weaker macro data due to the lockdown. So which is it? Is it a stronger China? Is it a weaker China? What the hell is going on? Gold surged by $12 on Friday to end the day at $18.19 an ounce. Declining dollar suggesting that the Fed will change courses, causing the metal to rally. This morning, gold is under pressure, falling by $17 to trade at $17.98 an ounce, struggling to hold the trend line at $18.01. Overnight, China's central bank cut rates in order to support their economy, which has come under pressure due to COVID-19 lockdowns and a brewing real estate crisis. Many are now saying that Chinese demand for gold is going to ebb as the economy struggles, and so the algos are sending gold lower. Again, remember, it's August. Moves are exaggerated. Eco data today includes the Empire Manufacturing. Expectation is for it to be at 5. That would be down from 11. Tuesday brings us building permits and housing starts. Both expected to be down month over month as well, right? Think interest rates. Capacity utilization and industrial production suggests that inflation is not subsiding. Capacity utilization is expected to come in at 80.2%. Remember, anything greater than 80 is considered to be inflationary. The higher we get away from 80, the more inflation there is. But let's not quibble about that, because I'm sure that someone is about to change the definition of capacity utilization at any moment. Wednesday, it's all about the July FOMC minutes. And while they're old, no one is expecting to learn anything new at all, although so many analysts are going to be combing through the minutes to find something that nobody else saw. Maybe like plans to reduce the balance sheet? Maybe. The minutes expected to reveal that the Fed is laser focused on inflation and has every intention of staying the course. Recall, this was all but promised by Chucky Evans, Neely Kashkari, and Mary Daly last week. Even former Dallas Fed President Bobby Kaplan chimed in. And he resigned his position, remember, last October because, think Pelosi-style trading, but that's not important right now. Don't go there. He jumped in saying that the Fed needs to stay the course. Remember, none of these people have a vote as they are not on the committee, but they can be a source of information when there are so many questions. And just an update about Dallas, the Dallas Fed has now appointed Lori Logan as the new Dallas Fed president. She takes over in late August and will be a voting member of the FOMC. She was the executive vice president of the New York Fed, and we're about to find out if she's a dove or a hawk. All right, so pay attention. U.S. futures are down this morning. The talking heads will tell you it's because of the weaker data out of China. Okay, you run with that if you want. I'm not going down that road. Dow futures down 180, S&P's down 30, NASDAQ down 100, the Russell's down 15, and it's a big retail earnings week. Walmart, Home Depot, Lowe's, TJ Maxx, Target, Kohl's, and a bunch of others. Investors are going to be watching how surging inflation is affecting consumer psyche. Recall that we got a bunch of revised estimates, all lower, so a fair amount of damage was already done. Think Walmart and Target are just two of the names that come to mind. Notice what has happened to those names when they pre-announced. The thinking here, as is usually the case, is let's get out in front of the report, cut the outlook, announce all the misses, take the hit, and then when they do report, it's going to appear as if we beat the estimate. See how that works? It's all very orchestrated. Last week, Walmart also announced that they're laying off 200 corporate employees. What's up with that? Is the consumer slowing down? What will they say about what are they going to say about inventory? Will we see big Christmas sales in September to draw people in? Will they raise their dividend? Will they announce a bigger stock buyback program? We're all about to find out. So just sit tight. European markets are slightly higher. The Europeans apparently not concerned about the China data. There's no macro data in Europe today to point to, just last week's UK GDP, which contracted, along with inflation prints from France, Spain, and Italy. At 6 o'clock this morning, European markets were up about 0.2%. On a side note, another delegation of congressmen led by Senator Ed Markey, Democrat from Massachusetts, landed in Taiwan on Sunday to discuss climate change and supply chain issues along with trade. So I asked, why exactly did we go to Taiwan again just 14 days after Nancy Pelosi and her delegation went? And we're discussing climate change with Taiwan. It's that important that we fly over there and discuss climate change with Taiwan? I mean, what am I missing? The S&P ended the day at 4280, up 73 points. We tested a low of 4219 before bouncing to end the day on the highs. We remain in the 4115, 4335 trading range, but I think we're going to find support at the 4200 level, unless, of course, the retails report horrible numbers and weaker, cautious guidance going into year end. Remember, Jackson Hole, Kansas City Fed boondoggle is only a week and a half away. There's sure to be lots of speculation around what we're expected to hear. So in any event, it's just time to sit tight and be patient. Remember, August can be a wild month, right? Just because of vacations and lack of participation. Okay, what are we having for dinner tonight? We're going to have the Parmigiana crusted Mahi Mahi. Now, you can use this recipe on a bunch of different white fishes. Today, it's on the Mahi Mahi, right? It's simple to eat. It's an easy dish to make. It's always good. A big salad, some steamed vegetables, and you're off to the races, right? So for this, you need the Mahi Mahi. You need fresh grated Parmigiana cheese. You need mayo, seasoned breadcrumbs, salt and pepper, fresh lemon, and olive oil. Now, you want to take the fillets. You want to rinse them, pat them dry. Season them with salt and pepper, a little squeeze of fresh lemon juice, and a splash of olive oil. Just let it marinate the fish. Put it in the fridge, let it marinate for 30 minutes or so. When you're ready, remove the fish from the fridge and let it come up to room temp. Or actually, if you want to, if you're going to use it right away, just leave it out on the counter. Not a big deal. Preheat your oven to 400 degrees. Now, in a mixing bowl, you want to combine a half a cup of mayo, a handful of Parmigiana cheese, some seasoned breadcrumbs, mix it all up. That should be enough for the 4 pieces of Mahi Mahi that you have. If you have more than 4 pieces, you got to kind of increase the recipe a little bit, but use your head for that. Now, place the fish in a baking dish. Top it with the mayo breadcrumb mix, right? Each just put it on the top. Place it in the oven and cook it for 20 minutes or so until it's nice and golden brown, right? You want to serve this with a lemon wedge, some rice pilaf, and some steamed broccolini. Goes really well with this. You could use steamed green beans would go well with it. I like steamed broccolini, so that would go well with it, right? You can enjoy this with your favorite chilled white wine or even a rosé. Not just saying, you can drink rosé with this. This dish should cost you about $30 to feed a family of 4, right? Now add in the wine, so maybe it goes to 40. Depends on how much wine you drink. Depends on who's drinking the wine, but one way or the other, this should cost you about $30 to feed a family of 4. So, in any event, the day is just getting started. It's a new week. It's going to be a big week for the retailers, so keep your eyes open. Until tomorrow, take good care.